The ABSA BER PMI has reversed its losses registered in August and reasserted itself in expansionary territory. Released today, the index rose to 52.8 points in September, up 9.2 points on the previous month. This was driven by the Business Activity Index, which increased by 11.8 points to 50.7. New sales orders were up by a substantial 18.5 points, while domestic and export demand also showed signs of improvement. Exports registered a third consecutive month of increase up to September. ABSA says an improving domestic situation will likely augur well for the manufacturing sector, noting lower producer price inflation as well as the beginning of interest rate cuts. It believes this relief may help to boost demand for manufactured products. There were also positive indications from the employment index, which showed an increase of 6.8 points to 48.9, just shy of the 50 expansionary mark. Well, earlier I spoke to Andiswa Nondudule, an economist at ABSA CIB, about the PMI data. This is quite a very positive print. So does this mean that August was somewhat of a blip, given that the average PMI in the third quarter was actually around 49, which is closer to the 50 mark?
Yeah. I think the data recently has been quite volatile, and it's, I think, for us quite difficult at the moment to decipher is this a trend or is this noise. But as you said, yeah, September we did see a rise in the PMI, but I think it's difficult to say really if what's actually going on there given the volatility in the data.
So come to September, the headline number that you've just told us about, which is a positive improvement, 52.8 points. What were the key drivers there?
The key drivers for that was we saw a huge improvement in business activity levels as well as new sales orders. So those are the key drivers for the headline figure.
So SABC reported that PPI had come in below 3%, which suggests that producers are having to deal with lower inflation levels. To what extent is that going to help them in terms of, being able to produce at a reasonable cost, but also in terms of the wider economics that they're seeing in the environment, in terms of demand and so on?
Yeah, so as I said, that was a positive for the sector with PPI being 2.8% year on year. So I think if you look at it in terms of what that means for producer prices, for producer prices on the manufacturing side, it is a positive for them. And I think going forward as well, given the continued strength in the rand as well as the fuel price cuts that we saw in September, so that bodes well for prices going forward. And if you see actually at the latest print for the prices index, that was the lowest since 2018. So I think it really bodes well for the sector and demand going forward.
Yeah, but what about Andiswa, what about smaller businesses, even medium-sized businesses that are having to contend with these yearly electricity tariff hikes? We understand that Eskom wants a 36% increase for 2025. It's just untenable and really not sustainable. How are those kinds of businesses going to manage? Because some of them can't afford to get the fancy renewable energy and so on. So they have to deal with these higher costs.
Yes, definitely. So yeah, as you said, so for direct customers, yeah, so Eskom is asking for about 36%, but if you look at for municipalities, that's about 43%. So yeah, it is quite high, and yes, as you correctly pointed out, businesses are going to have to absorb those costs, unfortunately. But I think with now the reduced costs from load shedding and so forth, so that does take a bit of the pressure off businesses. But as you said, yeah, the high electricity costs will affect businesses.
Yes. And then do you think that the consumer will be in a good enough state to also then be able to receive higher costs from producers because they're, shouldered with higher costs from things like electricity?
Yes, we are likely to see it filter on through to the consumer, but as we saw, producer prices have been quite low generally. So I think that's also going to sort of soften the blow on the consumer side. And yeah, with expected interest rate cuts, we've already seen one in September. So with more expected interest rate cuts, that should yield the consumer somewhat as well.
It was quite positive to see the employment index having ticked up nearly 7 points, and it usually doesn't move that much. What does that tell you, even though it's still below the 50 mark?
Yeah. So what it tells us is that there is an improvement, but not, I guess it's not a meaningful improvement. I think what we need to see from the sector is a sustained improvement in production levels in order to see that employment index rise. And I think maybe manufacturers are a bit, undecided about what to do with employment, because you don't want to invest in employment if there's no production. So we would have to see a sustained improvement in production levels before we can see any meaningful improvement in the employment index.